Hello, finance experts. My name is Tanner LeBlanc, and today I'm going to be presenting a brief financial analysis of the adult beverage industry for you. The first of the four companies that I'll be analyzing is the Boston Beer Company, which is going to be denoted by the ticker symbol SAM. The Boston Beer Company is headquartered in Boston, Massachusetts, and its flagship brand is Sam Adams Boston Lager, but it also supports alternatives to beer in the form of Angry Orchard cider beverages and Twisted Tea Spike sweet teas. Next, we have Craft Brew Alliance, which will be denoted by the ticker BREW. Headquartered in Portland, Oregon, it offers beers under the brands Kona, Weidenberg Brothers, Red Hook, and Omission. Third, we have the Constellation Brands Incorporated. It's going to be denoted by the symbol STZ. It's headquartered in Victor, New York, and its main products in beer include the brands Pacifico, Corona, Modelo, as well as other wine and spirit products. And finally, we have Molson Coors Brewing Company, denoted by the ticker symbol TAP. It's headquartered in Denver, Colorado. Coors sells beer under the brands Coors Light, Miller Lite, and Blue Moon, and it also imports and sells beers under the Dos Equis and Tecate brands. The first financial aspect to be analyzed is going to be liquidity. Other than a few outliers, all of the firms in the industry are fairly low in terms of liquidity, matching almost dollar to dollar their current assets to current liabilities. One important thing to note here is Coors' consistent liquidity issue. Over the past 5 years, it has failed to be able to match its current liabilities with current assets on a dollar-for-dollar basis, which is unlike the industry analyzed as a whole, which could mean that the company could have trouble paying off its short-term obligations as they become due in the future. As you can see, it's presented here, being below zero throughout the 5-year time series. All right. Which leads us into our next topic of long-term solvency. In terms of long-term solvency, there's two main questions to be asked: how much debt, and can you afford the debt? Based on the time series, every firm has become less levered, with the exception of Coors, which has increased its debt over the last 5 years, potentially to deal with the liquidity issue discussed in the previous slide. Constellation has been the most levered of the industries, with one of the lowest abilities to pay, as you can see, highest on the financial leverage graph, and then lowest on the EBITDA to interest expense graph, whereas Craft Brew Alliance has been one of the least levered, the second least levered company, but the highest ability to pay. Alright, moving into the asset efficiency. Through the time series study of total asset turnover, you see two firms that were the least levered, which are the Boston Brew Company and Craft Brew Alliance. The two least levered companies are able to have the greatest asset efficiency, whereas the two highly levered companies have lower asset efficiencies. And this will lead us into our next aspect, which will be profitability. You have all four firms' profit margins at the top, and then the three breakouts of profit margin, which are tax burden, interest burden, and operating margin. Although Constellation and Coors are the riskier of the four firms in terms of leverage, they have consistently outperformed the Boston Beer Company and Craft Brew in terms of converting sales to profits, which is going to be measured by the profit margin here. So you can see Sam and Craft have lagged behind consistently, with Constellation and Coors kind of coming back and forth with the higher profit margins, and it's also evidenced by their high operating margins. Alright, and then all of the firms experience roughly the same interest and tax burdens, with the exception coming from Craft Brew during the years 2016, which was a bad year for the company, in which it decreased a lot of its interest burden, and in 2017, which was a huge comeback year for the company. And the more it made a lot of money that year, which leads to higher taxes, as you can see here on the tax burden graph, around 2017. The more money that they made, the more money that they paid in taxes. And that will move us into the single most important accounting measure, which is return on equity. And it's driven by the last two slides of asset efficiency, total asset turnover, and profitability, profit margin, and its breakouts of profit margin, which all comes together in return on equity. As you can see, Constellation and the Boston Brew Company offer the highest return on equity, with Constellation being slightly above what Boston Beer Company can provide. And then lagging behind are Coors and Craft Brew Alliance. Alrighty, moving into the projected prices. The way that I projected my prices was taking the price earnings ratio estimate of 2019 and then taking the projected high, average, and low earnings per share estimates from Yahoo and simply just multiplying those two numbers to come up with a high, average, and low price for each firm. And then I simply took, as of November 20th, 2018, took the change in price in order to come up with a spread. And to see that graphically represented on the next slide here, you can see Brew offers the highest spread with the most upside but also the most downside. Constellation has the tightest spread with pretty high upside and 30% appreciation and a low side appreciation of 13.91%. And then Tap and Sam offer about the same type of spread with not much growth and somewhat high downside potential. But this is simply just a projected based on the 2019 PE ratio estimate and the high, average, and low earnings per share estimates provided by Yahoo Finance. All right, and then finally, the most crucial financial analysis is presented by the ROE decomposition and the weighted average cost of capital EVA spread graphs. ROE decomposition is simply the deconstruction of ROE into its two main ratios: ROA, which is the measure of return, and equity multiplier, represented by the financial leverage ratio, which is the measure of risk, and also of how much ROE is magnified due to leverage. As you can see, Boston Beer Company not only presents the highest return, but it offers that return for far less risk than its closest competitor in Constellation. This also shows us that even though Constellation's ROE was higher, as you can see in the graphs before on ROE, Constellation has a higher return on equity that is most likely due to the financial leverage it also maintains, which magnifies that return on equity. The weighted average cost of capital economic value added spread graph gives us a representation over time of the performance of each of the firms. Weighted average cost of capital can be defined as the return investors expect for every dollar it's raised towards the firm. An enterprise value added spread shows us how far above and beyond the firm can produce a return for investors above their expectations measured by the weighted average cost of capital. With this being said, Boston Brew Company is the only company over the 5-year time series that has been able to consistently deliver a return above the weighted average cost of capital, above and beyond what investors were actually anticipating. So along with its ability to offer investors a high return without the aid of excess leverage, I would have to recommend Boston Beer Company over the industry peers analyzed in this study. Thank you very much.